This is Eric Muathe with Muathe.com, January 6, 2020. I almost said 2019. Still getting used to the new year. Alright, so here we are, market still showing momentum, slightly up for the day. I want to take a look at two tech names that are moving in opposite directions as we begin the new year, the new month. We can see here, Applied Materials, AMAT, for the month down about 2%. Not by much, but down about 2% nonetheless. Right here on the monthly, and we'll take a look at Facebook, which as we begin the new year is up about 3% so far. So it looks like they are diverging, even though they generally in the same tech space. A little bit of a different business model, but let's just say they are all technology names. Alright, so which one would be leadership? In other words, which one is giving us the right cue as to what we can expect as far as the general market is concerned? Well, that's a complicated question, but let's try and see what we can learn from the charts. To begin with, you can see AMAT here is showing RSI 69.1. Well, it's hard to write right now. Let me scratch that. Also 69.1 uniform activity rejection, and that is a problem. Also, if you take a look at the long-term monthly chart, we can see that if we take this very important break in 2000 and use that information, remember this led into a massive bear market move. Take that information and draw our uniformity resistance line based on my method, the uniformity method. We can see that this is where AMT has struggled as far as long-term monthly chart move is concerned. Just show you some of the major areas over the last 20 years or so. There's a break here, which is this period, and a recent break here, which is this period here. And now, as we begin 2020, it seems to be like this is potential resistance. Now, of course, one way to change this outlook is to turn around and stay above the red line. But what I'm getting at here is very simple. As long as AMT is showing this look, this resistance on that red line, chances are the next major move is going to be for a major drop. Now that's the outlook as long as we are negative for the month. As far as Facebook is concerned, it's moving higher. One of the issues I have with the chart is we don't have the look for the ultimate Muathe breakout, even as it is breaking out in price. The RSI and MACDs are not where they need to be for a quality breakout. Which tells me that even as prices continue moving higher, ultimately the big move is to the downside at this rate. Again, stock can go higher due to momentum, but as long as it has that look and does not meet the minimum requirements for a quality breakout, I would suspect the next major move is actually in the opposite direction, which would be lower. Now, why would I say that? The reason is very simple. If we take a previous breakout line, which turned into support, so let's draw it somewhere around there. You can see a breakout here, which began this fantastic move in 2013. That same area would become support a couple of months later, support early 2014, support late 2016, and support in early 2018, before this all-time intraday high here at about 220. Since that high, we can see that this has turned into a resistance line and a break line, resistance here for this movement lower, and in 2019 we tagged this twice and we stalled. So clearly, if the bulls are going to move this beyond current price levels, they need to keep this above this blue line. Otherwise, on a month-to-month time frame, which might take a while, if we end up seeing resistance back below that area here, that might signify that somewhere around here there's going to be a reversal, and that AMT is actually giving us the correct look. So based on those two blue chip technology names, I would say to watch out for potential resistance. If it happens on the RSI for Facebook on the monthly, that might suggest that actually the major direction in 2020 might actually be eventually rolling over to the downside. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. EACS.